A wonderful good morning, ladies and gentlemen, and welcome to NAGA and Markets for Breakfast. My name is Alex Duvidari, and today is December the 5th, 2019. And yeah, if we had to single out one thing that keeps markets in check, it is that we saw yet another turnaround in the risk sentiment. And that is a odd one, tell you the truth, for like normal people like me, I think. Because what we had was an article from Bloomberg that was suggesting that the phase one deal is getting closer despite the harsh rhetoric between US and China. So negotiators getting closer on amount of tariff relief, basically very, very close to really finalizing this deal. And Trump's comments about, yeah, we can wait until after the election are not indicative of talks falling apart. So that is news that in that way probably most people did not expect. And there is an interesting tweet here I thought was here downtown Josh Bronson is saying this is where human traders will outsmart algorithms that were programmed to buy S&P futures on the keywords, moving closer to agreeing. No human is actually still dumb enough to fall for this anymore. So then the question really is now, is there a deal happening? Is it really getting closer? Yes or no? It is really difficult to say, to be honest, because the news around it are so how can you say, like, conflicted, that it's is it fake news, is it not, we really don't know. And in fact, HuXijin tweeted yesterday, and I found that like particularly amusing, even though we're talking about markets and not about comedy here, is that unfortunately it's loading a little bit slower. I apologize for that. Here we go. And he was saying, I predict there is a high probability that President Trump or a senior US official will openly say in a few hours that China-US trade talks have made big progress in order to pump up the US stock markets. They've been doing this a lot. And even though if it sounds funny, by the way, manipulating markets is a crime, but seems not for everyone. So he predicted that, and it turned out not to be the president or a senior official. It turned out to be Bloomberg, but God knows who fed Bloomberg that story. So what happened to the markets because of that is that we saw a complete turn of risk sentiment, meaning risk on came back, and it came back strong. And I mentioned that as a possibility yesterday. I said, like, I don't necessarily expect it, but we have to expect that it's ever probable and possible, given that, the environment we're in. And we can see that there is pretty much a recovery in place here, even though. And now we get back to like hard fact data. If we look at the data yesterday out of the US, remember we talked about it, that it could be quite a data heavy week. First of all, we had the services PMI out of Europe that were a little bit mixed, even though the good part is that Germany continues to see a little bit of a trend back to the living world, if you want. And out of the and UK also did well, but out of the US, and this is what I want to focus on first, is that we saw ADP employment change a lot weaker than expected. Labor productivity a lot weaker. The services PMI came in unchanged, but here the non-manufacturing ISM came in weaker, and the non-manufacturing employment came in weaker. So the important part of the data came in not necessarily better. And if we look at Lisanne, she's saying here, Lisanne Saunders, just a second. For some reason today, here. First of all, she says the November private sector's payroll from ADP up 67,000. Consensus 135, with October number revised down to 121, which suggests the possibility of a weaker than expected Friday BLS report. So we'll also have to see on Friday that report. November services PMI, as expected, unchanged from prior month. Increase in output supported by upturn in new orders, new order inflows, and subsequent rise in backlogs led to rise in employment. Business confidence remains muted with weak sentiment towards 12-month outlook. So it's not bad, but it's not really good. And the November services ISM index fell to 53.9. New orders, employment, export orders, prices paid all rose. Business activity, supplier deliveries fell. So it means that you can see that it has gotten more expensive, but not really. Business didn't pick up, and that is not necessarily it's not a very negative data set that is coming here out of the U.S., but it's also anything but very positive, right? I mean, and it definitely does not justify stock markets to go back up in the fashion that they are. Nonetheless, we have to expect that if this deal really happens, that things will be ignored. It's all going to be about going up and up and up. And what it says is that it made significant progress in the amount of tariffs that would be rolled back, and even the timeline is pretty strongly expectation. There's pretty strong expectations now, because that Bloomberg report said the tariffs is supposed to have an agreement before the tariffs of December 15. So the only thing that's left is how to guarantee China's purchases of U.S. agriculture goods, and exactly which duties to roll back, from the tariffs. So that is, I don't even know what to say, and everybody's jumping on this market. But the thing is that what I see is that for the market to go first this way, then the other way, what we lack is conviction in either really one direction. And that is not a positive development per se, because it means that news can play with the markets however way they like. And no offense, but this Bloomberg article could be fake news. I mean, if HuXijin is saying, hey, the president or senior U.S. official can try to do that, why wouldn't Bloomberg be made to do it? I don't know, someone works there, who knows? I don't want to get into all that too crazy stuff now, but the timing is too odd, and also the substance of it is not so convincing. So what did we see as a result? As a result of that, we saw that those safe haven currencies like the Swiss franc or the Japanese yen, they took bigger hits yesterday. I mean, let me just open it up. Here's the dollar yen, for example, dollar Swissy. What's going on with this computer here? My apologies for the laggy. All right. So that's a chart I'm not allowed to see. No problem. Anyway, let's take a look at gold then. Maybe gold can be also, it's a very good thing to look at in terms of how risks are actually behaving in the market. And that is, when you look at it, you can see that gold is still holding high here. So gold has not just swallowed the news about what's going on here, and that is not necessarily something that we should ignore, especially with the price rather not reacting negatively at all here. And that, in my opinion, is something that clearly tells me that, okay, that could be a bluff. It could be a bluff, and the market is waiting to see where this will be going. Because we see overnight that, for example, here you can see yen is back up a little bit. Swissy is also back up. And the two biggest, or the first, one biggest currency that gained yesterday was the Kiwi. And remember, we talked about the Kiwi in the recent days repeatedly, and also talked about the reasons why it could continue to go up. And there were further news out of New Zealand yesterday. For example, the RBNZ said that they have plans to force banks to raise their capital ratios. So large banks will have to hold 18% in total capital and 16% in tier 1 capital. And if you compare it to right now, it's 10.5%. So that will just increase